All right, everybody, welcome back to the series on volume profile. In this video, we're going to go into detail using an example here of crude oil of how to use volume profile in a choppy market, a range-bound market. If you haven't already seen the introduction video to volume profile and the other long video where I went over several important concepts, you should definitely check those out before moving forward with the volume profile videos that are specific to trending and choppy markets. However, if you want to watch this just because you're curious about how to use volume profile in a choppy market, you can do that. I just recommend that you'll get the most out of all these videos if you actually stick with the order in the playlist. All right, let's go ahead and just quickly introduce the key areas. This is the crude oil hourly bar chart. I'm using my Owings market analysis here, all these lines and dots and things. Don't have to worry too much about those right now. We're going to be focusing on the volume profile, which you can see here, and how the hourly intraday bars react to the volume profile. And of course, we're doing this in different types of market conditions. We want to know how the volume profile is developing throughout the day, depending on the type of market we're trading, because volume profile trading is much more of an art than a science. You can't get a quantitative if A then B scenario all the time. You have to understand the market condition you're in and what's going on, and then you'll know the specific things to look for in the volume profile for that specific type of market condition and that type of trade you want to put on. If it's a trend trade or a congestion, range-bound, choppy trade, you're going to have to match up your playbook, your trading playbook, to the type of market we're in, and understanding how volume profile is during each of these different market conditions is crucial to your success, which is why I'm making these videos on how to use the volume profile in very specific market conditions. The last video was on how to use it in trending markets. This is going to be in congestion, choppy, range-bound markets, right? So you've got the value area here in green. Again, this is where 70% of the day's volume is trading up to this current point in time. We've got the point of control, the most heavily traded price of the day in orange, and then you've got all the light gray volume outside the volume, the main volume value area up here. This is above the value area high. This is below the value area low, and we've got the value area high, this green line here, the value area low, this green line here. And basically, price is always searching for balance. That's what the auction is telling us. We're always looking for balance. And when you're inside the value area here, you're more balanced. The point of control is the most balanced point of the day. That's why it's the most heavily traded price. And when you get out of the value area, either to the upside or the downside, it means price is searching for new balance because it's out of balance, right? This is where sometimes trends will evolve and take shape throughout the day as price is searching for more and more balance, either to the upside or the downside. I cover that in a lot of detail in the last video on how to use volume profile in trending markets. So definitely go check that out. You can see the differences between using the volume profile in the trending markets and the range bound or the choppy markets, which we're going to go ahead and look at right now. So in the range bound, the choppy markets, you can see here, crude gives us a great example because crude is a very volatile, very choppy market. This is the crude oil futures contract. And what I want you to pay attention to first and foremost is that, first of all, you can see heading into the New York session, this is about 7:30 a.m. right now. You can see the clock up here. Sorry, it's 8 a.m. There's the clock. So we're going to do the replay function here because we always do the replay so you can see how the volume profile is developing throughout the session. It's no good to look at a volume profile that's fixed at the end of the day because you have no idea how the different zones were shifting back and forth throughout the day, and that's giving critical information. And that's what I'm trying to teach you in these tutorials is how to use volume profile throughout the day as it's shifting to help you know what type of playbook you should be in. Should you be in your trend playbook, your congestion playbook, right? How long should you hold your trades? Where should you put your stops? All these things are really important, and you can use the volume profile like I do for confirmation for my Owings market analysis. You can use it for, your moving averages, your MACDs, whatever it is, your candlesticks, whatever patterns you use, you'll find a way to match it up to the volume profile. Again, you can see me use it on my own trading every day live in the YouTube live stream from 8 a.m. Eastern on the channel. I just started that. It's going to be a lot of fun. Made $1,000 trading silver on Friday. So I'm really enjoying, the whole journey here with sharing this with all of you out here on YouTube. it helps me as well, because I learn. The more I teach, the more I learn about my own setups and everything I'm doing. So I really enjoy it. Hope you guys get value out of it. Okay, so what we can see here is heading into the day, we've got crude oil here at 8 a.m. As we said, the clock is 8 a.m. So this just closed here, right? You can see 7 a.m. And now we're in the 8 o'clock hour, which for crude oil is, pretty good. It's pretty active all day. But, if you're going to trade crude during New York, it kind of gets going around 8 a.m. with gold, silver, the bond market, and then, stocks typically will get going at the open at 9:30, unless there's a big announcement at 8:30 a.m. Eastern, such as non-farm payrolls. So in this case, you can see crude is pretty volatile heading into this day. It's a choppy day, as we can see. And one of your first clues, in addition to the price action, right? You can see the price action here, right? Or big up moves, big down moves. And you're just kind of wondering, is the choppy price action going to continue? If so, you want to bring out your range bound, your choppy congested market playbook. You don't want to trade your trend playbook, right? And this can be very difficult to know in the moment, trading the hard right edge before you know what's going to happen, because all of a sudden, there's a big move up and then boom, we get a big move down. Hey, maybe this is the start of a trend. Are we going to break lower? Well, I use a lot of different things to give me clues as to whether or not that's going to happen. I use all my weekly, monthly charts for Owings market analysis. I use the volume profile on the monthly, the weekly, the daily. So I'm using a lot of things to make these decisions. But for the sake of the example and to help you on your journey of understanding more about volume profile, we're just going to look at how the daily volume profile all by itself can help us. Really, you should start with trying to understand this first. And then once you understand this, you can, start to match up with weekly volume profiles, monthly volume profiles, all that good stuff. And then you can really, really get some amazing reads on the market, which I'll show you that I do during the live stream. If you want to come check that out, you'll see how I do all that with all these different charts live in real time as I'm trading my own account. So here for this example, the first clue that you'd have that this is probably not going to be a trend down breaking out here, and it's probably going to stay in balance, is that you've got a double distribution. You've got a distribution here, right? What's a distribution? A distribution, this is where a big fat chunk of volume is trading. You can see here. And then you can see this other distribution up here. These are light gray because they're outside the value area, but you can see it's a big chunk of volume. I mean, it goes out to here, right? Let's go ahead and redraw that a little better. Basically out there, right? So you got two distributions, one here and one here, right? So, and then you got this sort of low volume area in between. So with this big distribution down here and this big distribution up here, this is telling us that the market already today has found a lot of balance here and a lot of balance here. So it's exploring these two areas. This is going to be your first clue that it's going to continue to be a choppy market or a range bound market. And you can use that information to your advantage, because you're going to want to, bring out your mean reversion trading strategy to, buy as you get down near the value area low and sell as you get up near the value area high. That's what's the most important. That's what you want to look for when you're trading these strategies in a mean reverting market. So keep that in mind. So here with the value area low, when you start to get down here and you already see this double distribution here, right? So now you want to know, where is the point of control? That's super important. Where's the point of control? It's always in orange here. So you can see the point of controls here, but pay close attention, because you see this volume node sticking out here, this high volume node. HVN is what that acronym stands for, high volume node. It's almost the same length sticking out as the point of control here. So you've almost got 2 points of control. This is another super important thing to recognize if you're in a choppy day. If you have a couple of high volume nodes that are about the same, you've essentially got 2 volume point of controls, right? So that's a market that can't agree on where the fully balanced price should be, which means what? It's probably going to range more or less between the two, right? So that's a key piece of information. And by the way, you guys should really, I would encourage you, if you're serious about learning about the volume profile and everything and really having this make a practical positive impact on your trading, take notes and review these notes and study your own charts and ask me questions in the comments, because these are little things you think you might remember, but it's hard to remember, especially in the moment, when things are unfolding and you've got to make decisions under pressure. You want to have your volume profile playbook with your notes. In this case, that's a big thing I just pointed out, with your double point of controls essentially is, and your double distribution is giving you a good clue that you're not in a trend day, you're in a range bound day, a choppy day, right? And of course I use all my Owings market analysis tools to, reinforce all this stuff, but this is specifically for the volume profile for those of you who enjoy learning and trading the volume profile. So then what we need to do is we need to see how this develops. So that's why I've got the replay button. That's why we go ahead and watch this tick by tick. It's super important. Sierra Charts is fantastic for that. Just blown away by their technology. Absolutely love it. So what you can see as we start to get down here at the lower end of the value area, right? The green line here. There's no volumes traded down here yet, right? So if we're going to stay in congestion, then what you're going to see is you're going to see price get rejected down here. On low volume, meaning it's going to come down here and then push up and push. So let's click the replay button here and see what happens. Go ahead and speed this up a little. So you can see right there, we tested, we're testing lower, right? And this is just one really important point I want to bring up. I'll just pause it real quick. I always make my trading decisions, as you'll see when we live stream together, based on the hourly closes, because that's what gives me time to go through all the major futures markets and find the setups that I like throughout the day, right? Of course, based on the pre-market forecast as well, I have a very good idea of what I'm expecting for the day, but then I use the hourly closes, right? So as this is exploring lower here, intra-bar at, 8:12 a.m. Eastern, I'm not wondering if I should be shorting or longing. No. I've already made my decision based on that close, and now I'm just waiting on this close. And if I'm particularly interested in, one of these markets in a certain area, then I will go ahead and pay close attention to how the volume profile develops as that bar develops in that area where I'm interested in taking action. So, for this example, let's say, since we knew that we were in a double distribution day, we expect the range to continue. We know we're now, toward the lower end of the range. We'd be interested in seeing, how this 8 to 9 o'clock a.m. hourly bar, how the volume profile develops as this explores lower. And that's the information that we're in the process of getting. So you can see already that the value area pushed lower. There is a little bit of volume coming in down here. Let's see how much volume comes in down here. Okay, so what you can see here is as we're breaking lower, right? So we're pounding through the lower end of the value area. We're breaking lower. The question you're going to be asking yourselves, is this going to break out into a trend to the downside, or are we going to stay in this wild, volatile congestion area? And we already had our clues with the double distribution and the double POC, point of control, that we would end up being in congestion as opposed to, breaking out into a trend run to the downside. So we're interested to see what happens on the close of this bar with the volume profile over here. And right now up here, you can see we're only about 15 minutes into this bar, and we've got quite a lot of volatility so far in this bar. So let's go ahead and play this, and we'll see as we're exploring lower here what's happening to the volume profile here, right? You're putting in some volume, obviously, right? You're outside the value area low here, okay? And the question you want to ask yourself right now, again, are we going to be breaking out into a trend to the downside, or is the volume profile suggesting that we're going to continue to be range bound? And so what you're going to want to see is, first of all, how does price react down in here? And then is the point of control going to shift from here to here? Because that's a big deal. If the point of control shifts down here, it's telling us that we're getting prices that are being accepted lower. Therefore, you can be more likely, to start trending to the downside. Whereas if the point of control stays here, then that's the most accepted price of the day. You're much more likely to revert back to that price at some point. So then you'd be looking to trade your mean reversion strategy, right? So right now it's 8:23 a.m. Eastern. I have no idea if news is coming out on this day at 8:30. We'll see. We're just watching this develop. Okay, so you can see right there, we're about 8:34 a.m. Eastern. Enough volume got put in down here, right, that all of a sudden the value area low shifted down here, right? Really interesting that this value area low lines up beautifully with my own extension trend line right there when I connect this high through that high, extend it out. It's a beautiful support level, especially when you've got it inside the pocket there, but that's all for another day. So what you can see here as this is developing, remember you have time to do this, and this is what I'm going to go over with you guys in the live stream, so you can see it. This wouldn't be any good if we were just looking back at things going, well, I would have done this, I should have sold this high perfectly and then I should cover down here. No. You got to be able to be realistic about these things and use all this information to make better trading decisions in real time, right? Otherwise it's not practical, it's not of any value. So what you can see here is that you got some decent volume coming in here, and now if some volume, we still have 25 minutes left here in this actual bar, right? So we're on the verge of getting maybe a triple distribution profile, 1, 2, and 3, depending how much more volume we get. And we're probably going to take over the point of control down here. And that makes sense too, because New York is going to be more volatile, more volume. So more volume is going to come in here. So the point of control, you can count on that shifting down here. But the key is, what does that mean? If you've covered one of my, if you've seen my other videos, I talk about this a lot. Sometimes when you get that point of control down near the value area low, that will act to reinforce that support level. Same thing is true if you get the point of control up near the value area high, and that'll reinforce that resistance area of the value area high. But again, you have to match up price and volume. That's why it's not a science, it's an art. And that's why it's not really like, oh, well, just when you get to this level with a low volume node or a high volume node, no, you can't do it that way. You have to really pay attention to what's happening in context. So in this case, we want to see, we're already getting a good reaction, right? We're sucking up off these lows, right? And in real time, you have a lot of time to watch this, because I'm speeding this up really fast on the replay. But in real time, you have time to sit here and watch the volume profile shifting, watch the point of control shifting. What's happening to price? You got to always ask yourself, what's going on with price in relation to volume? So here we go. We're clicking the recording. You see, look at that. Just a huge move back up, right? And this is something that you could have anticipated. And the reason that you could have anticipated it here, we're going to close here in 2 minutes. Boom. I'll pause it. There's your close. The reason you could have anticipated this was because we came into the day with these double distributions, basically 2 POCs. So that's what you would have been expecting, right? And now that you have the close here at 9 a.m., I always use the hourly closes. That's just what anchors my decision making. So again, I'm curious, like I mentioned earlier, about what's going on with the volume profile as it's developing, but I wait for the actual close to make my decision. So in this particular instance, I would look at this and go, okay, well, let's just say all other things being equal, and let's say I actually wanted to trade crude at this level because I had weekly levels here and all the other stuff I'm looking at. Let's just say all things being equal, I want to buy this, right? For the sake of the example, I got a nice little pocket here on my OMA. That's good support. And I already have evidence on the volume profile that this is going to be a range bound day. Let's just say I've got, like a really nice weekly support level using my OMA here. I'm like, yeah, this is a great place to try and pick off a long for crude oil, and the volume profile is confirming that, right? So then the question would be, and we're going to get into some very specific videos on entries and exits and trade management, but I'm going over a little bit of that now in these videos on how to trade, the volume profile depending on what kind of market you're in, trending, congestion, because this is going to give you a little bit of an insight into how to structure your trades. And then we're going to get into more detail on those entry, exit, trade management videos. But for now, what we can see here is if you want to get long here, right? You really just want to look at, okay, well, where's the most, except if you want to get long near the value area low, that's where you want to get long in congestion, right? And now you can see that, first of all, I want you to really take this in here. Do you see how when we tested low here, the value area was down here at one point, but by the end of the bar, do you see how that value area low has shifted higher? Really important, subtle thing to notice that you're not going to see if you look at this back in time without replaying it. So that's key. The value area intra bar here tested lower and shifted back higher. That's important, right? Actually, I don't know if you noticed this, but I believe the point of control also shifted from here to here. So it's telling us, even though we closed lower, we actually accepted higher prices during this bar. What does that tell us? Well, it tells us that there's a divergence between the direction that price is moving and the direction that the POC is moving. And when that happens, you want to pay attention and follow the POC, not price. That's an important divergence. So then, and you can see when we got rejected down here, this was the point I was going to make. You see how there's not a lot of volume? That's a low volume rejection. That's good. That reinforces this area because price is not happy there. It wants to get back and, you know, hang out in the middle here where it's happy, right? So that's where it's going to go. You know, happy price, sad price. So what you see here is you want to look for in terms of an entry, you know, it depends how aggressive I would be on this trade. Each trade is unique. There's no, you know, one formula fits all. Depending on how, if I was going to be super aggressive, then I'd want to throw the entry at the, you know, the low volume area right there, right? That'd be kind of like the aggressive entry order. If I felt that this was going to push lower and test lower, then I would, you know, look to get in around the high volume area there, right? Because that was a happy price. So you might want to go back there and again, just kind of test it out. But certainly the entry needs to go in one of these areas and the stop needs to go down below, you know, this volume here below that low. So let's just say we're interested in getting long down here. The entry for now, I think, you know, since this is a pretty darn choppy day, you could probably pick off that high volume marker there, which is coming in, you know, 72.65-ish, which is about 17 cents lower than we are now on crude, which is $10 per contract, $170 lower, you know, per every one contract. So let's just play it forward and let's watch the volume too. This is the whole point of this. So important. Okay, right there. This is super important. So it didn't get down to your entry, right? And again, the entries and the exit, these are all going to depend on, you know, all just a ton of outside information that we're not going to bring into this video, right? So we'll cover all that later. For now, you can see we didn't test, you know, lower. And right as price was messing around in here, I guarantee you that if you go back and look at this in slow motion, which we don't have the time to do now, but when the point of control shifted from here, right there, down to here, this would give you a clue that you want to jump in right there if your bias was long, which our bias was long, right? Because it's telling you that all of a sudden, you know, the big players are getting really interested in this level and price is pushing up as the point of control is shifting here. You know, that's telling us that the buyers are aggressive and interested in buying this level. And, you know, you got to be careful when you trade around the point of control as a general rule. But if you're in the value area, and the point of control shifts down here to the lower end, and you think you're going to stay range bound and push back up here, then yeah, absolutely. That's a good spot to get long right around that point of control in the lower end of the value area, you know, to target up in here, the value area high, or, you know, somewhere up near these highs here. And you can just see you have a nice fat distribution, you know, up here and down here, right? So it's reinforcing the range bound thesis that we have here trading this in chopping markets. Okay. There you can see, and guys, look how accurate this is. This is tick by tick replay. If you had gotten long down here and you just set your target right there, you know, this might go higher. I don't remember what this does specifically. I know we're in a choppy day, but I don't know what it does, you know, on this bar. But just look how it goes right to the value area and gets shut down. There's a reason for that, because the people who know volume profile, you know, the big institutions that trade off the volume profile, because it really helps so much. You know, they know that you're in a range bound day and you're likely to stay in a range bound day. So that's a good spot to take profit, right? So on crude right there, that's, and if you got in about $73 and you set your profit up there at 73.75 or whatever that is, right? That's, you know, $750. That's better than getting poked in the eye with a sharp stick, right? On a good day. So that's not a bad trade right there. That's my little funny way of trying to say that's not a bad trade. Got to keep these volume profile videos a little bit lively, have a little bit fun. So right there, that's a really good way. You knew you were in a balanced day because of all the points I made earlier. I don't need to reiterate those. And you knew that there was a high probability. Just because there's a high probability doesn't mean it's guaranteed. Nothing's guaranteed in trading, right? But there was a high probability that we could cycle from this side down here back to this side up here. That's what ends up happening. Go ahead and play the video and wait for this close. We've still got about 45 minutes left in this bar. We'll go really fast here on the replay. We'll bump it up to 100 times the speed. So stock market is going to open now. And I want you to just notice, do you see again how the value area is lifting, right? And what happens? Why does the value area lift? Because the point of control is lifting, right? And now where's the point of control? It's back up in this upper distribution area, right? Because in a nice range bound choppy day, you're going to see this point of control sometimes shift from here back down to here, back down to here. And it's going to do that because we're in a nice rotation here, right? So just what we just saw earlier, and do you guys see how important this is? How you can't look at a chart after the day's over and have any idea what happened? I mean, look, the value area was down here and now it's right back up here again, right? Because we're rotating higher, we're shifting everything higher. When the point of control shifts, the distribution shifts, the value area high shifts, right? So now this is beautiful because it's 9:36 a.m. Let's wait and see where this bar closes, because I'm just doing it how I trade. I trade off the close of the bar. 10 a.m. boom, right there. Okay, 10 a.m. Now, what are we looking at? Well, we know we're in a range bound day, right? That's even more clear now. All we did was just rotate back up. We got a nice close, right under the value area high. Really beautiful OMA extension right here. Just, you got the pocket. I mean, I'm loving this, right? And you're at that old high. Of course, that's helpful information. You got the double top, but you just look at all these things. You go, this is probably a good spot, to start looking for a short up in here, right? So then the question becomes, what happened to the point of control where we shifted from here? Now we're here, right? So what did I say earlier? When the point of control shifts, now you got the point of control overlapping with the value area high. That's going to be a resistance zone, right? Just like back here, it was a support zone. So if that's your resistance zone and you want to get short, right? Okay, well, this one closed basically. You see, the reason I didn't get in on this bar at market here, and we wanted to wait for some confirmation, which came in when that point of control dropped down there. That was your clue to just jump in there, knowing that it's not coming back down to your entry order. Here, in this instance, we close right up near the high of the bar, but not on the dead high. This is a beautiful, these are the kind of closes I like, because it gives me a very clear definition on my risk for reward on the trade, right? I like to go in at market right there on the close. And then, like I've said many times, I'll have a stop way back here. That doesn't mean I'm willing to let crude just, fire up there. And if I'm short one contract, take me out for $1,000. No, if I'll have my stop up here in case I lose internet connectivity or something horrible happens and I can't get out of the trade. Okay, then I know the maximum damage on my trade is, whatever, that amount per contract, right? But I manage my trades, as you see in the live stream video from Friday, and as you'll see if you join me, hopefully, as we start live streaming together. I manage the trade while it's on. I make my trading decision based on the hourly close, but then once I'm in, I use the volume profile and I use Owings market analysis to get an idea of, okay, now I'm in this trade. Do I like what I'm seeing? And if I don't, I get out. So you saw this with silver on my second silver trade on Friday. I nailed it. It was a great trade. Looking back at it, I was like, oh, I should have held it. I would have made another $1,000 or something, right? But I just didn't feel comfortable. I didn't like what I was seeing. So I closed the trade, with like $100 profit on that second trade, which brought my overall profit to $1,000 for the day. And I was done with it. That was fine, right? So that's how I use the volume profile as the trade is developing. So let's say right now, for the sake of this example, we get short here, right? And now basically we want to see what's going on with the volume profile. And again, my stop is here, but mentally, even though the stop is here, I don't want to see this. Like, if I see this pushing higher and lots of volume is coming in while it's pushing higher, that says, Andy, this is probably a no-no. You don't want to be short here. Get out. And then I will get out, right? Because the volume profile and the price action are telling me don't be short. But right now I want to be short, right? Because we're at the value area high, at a beautiful OMA pattern. We're expecting this choppy day. So now that we rotated back up, we expect to rotate back down. We play. Okay, so look, we just punched up a little bit there. Pay close attention to this volume. Let's go ahead and expand that out so you can see that gray volume there. We're outside the value area. Now let's see what happened. Okay. See, we're rotating. So you see how as we rotated there, it lifted the value area a little bit, right? Which is no big deal because we just lifted it to that high. And the volume here, there was some volume coming in, but what was happening to price while that volume was coming in? Price was dropping. what does that tell us? Our thesis on the trade is correct, that our short is a good idea and we should be cycling down, right? So this is how you can use this information regardless of the market conditions you're in, once you understand how to tailor the volume profile analysis to the specific type of market conditions you're in. It's so important. Go ahead and play this. Just look for subtle differences here in the volume profile, okay? Okay, so now you can see that the point of control, it was jumping around right here, but it basically pushed out further. And now you've got just, a beautiful overall distribution on the day. You can see it's just a nice fat profile, very balanced. This is just telling us that it's, more evidence that our balanced day, is intact. So, now let's just say I'm going to cover all this in the video where I talk about trade entry, trade management, all that kind of stuff. But if I got short here at market at 74.10, we managed that trade beautifully. My initial target is down around the value area low down in here, right? We haven't gotten there yet, right? So then this is where the nuts and bolts of trading come in. And I can just tell you, for me, if I shorted 74.10, right now we're at 73.50, so up about $600 a contract. Didn't really take too much heat on this trade, maybe $300-400 a contract. So the actual R factor on this trade, based on what really happened, because I don't really believe in static R factors. We can get into that in another video. But basically, you've already got 1.5 reward for your risk. It's not bad. So it depends what kind of a day I'm having, right? Am I having a good day? Am I reading it well? Like, I know these things during the day while I'm trading. Am I up on the day? Am I down on the day? I don't care what anybody says. These things do obviously impact your decision making, right? They should impact your decision making, because if you're having a good day and you're up on the day, it means your decisions are working out. If you're not having a good day, your decisions aren't working out. So if I was having a bad day and not making good decisions, and I just happen to make this trade and have a $600 winner here per contract, I'd probably just be happy with it and get out. Now, if I was having a good day, I'd look at all this and I'd say, okay, maybe I'll trail my stop to just behind the true average here and target, down around the near low underneath the value area low. I really don't know what's going to happen in your interbar, but this is all going to be in the trade management video. The point of this video is just to tell you how you're reading what's going on when you're in a choppy range bound day, and how the volume profile can give you really good insights to what type of day you're in even before the day starts. And then this is how you use the developing profile throughout the day. You're going to see key differences between how the volume profile reacts on a choppy range bound day versus how it reacts on a strong trending day. And you'll also see, as I've covered in previous videos, how does it react when you're trending, but the trend is going to end. These are all really important differences of how to use the volume profile under different trading conditions. So I'm going to wrap this video up. We're going to get to so many more examples, but you can see when you really go into the detail of going over this stuff, a video very easily gets into the, 30 minutes to an hour long, because there's just so much nuance. There's so much to talk about. But once you really start understanding what's going on, the videos get really, I think volume profile is about, the most, aside from Owings market analysis, I think volume profile is so much fun, right? So this is why getting into the nitty gritty is really important, because this is how you're really going to develop your learning curve and learn how to use this, practically during the day while you're trading, because looking back doesn't do anything. That's why I think it's a key importance to go over the chart here, tick by tick, and replay it. And I'm hoping it helps you guys, hoping it gives you value. So please do like the video. It helps to get it out there and help other people who are struggling to understand volume profile, and subscribe to the channel and all that good stuff. And I do hope to see you guys in the live streaming chat starting Monday morning. I'll be there. I'll be doing my own trading. The reason I did that is I thought, I trade anyways every single day for myself, and I love trading. I'm comfortable trading. I have to get used to trading in front of an audience, to be honest, but that'll be a learning curve for me, and it'll be another challenge, kind of add an interesting dimension to my own trading. But basically, at this point in my trading career, I trade what I see according to my system, and what will be will be. So I take losses privately, I'll take losses publicly. I take wins privately, I'll take them publicly. So I'm excited about the challenge about trading live with you guys, and I hope you can really just get a lot of value for it. Yeah. All right. So take care, and I'll see you in the next video. Bye-bye.